For decades, the formula for the American dream was incredibly simple and straightforward. You save up your money, you buy a modest home in a quiet neighborhood, you purchase a reliable car, and you pay your insurance premiums every single month to protect your family from the unknown. You played by the rules. You did everything right. But in 2026, the rules have been completely rewritten behind closed doors. You are no longer being protected. You are being aggressively priced out of your own life by a system that has fundamentally broken down. Welcome to the 2026 insurance death spiral. A crisis so severe that it is quietly forcing middle-class Americans out of their homes, off the roads, and into a state of permanent financial anxiety. If you think your biggest financial threat is your mortgage rate or the price of groceries, you are completely missing the silent tax that is draining your bank account dry. Let us look at the terrifying, unvarnished data that the massive insurance conglomerates do not want you to see. For the fifth consecutive year, home insurance premiums are skyrocketing. By the end of 2026, the average national premium is projected to break the catastrophic $3,000 mark. That is roughly $900 more per year than you were paying just a few years ago in 2021. And if you think this is only happening in hurricane zones, you are completely wrong. This is a nationwide bleed. In the last year alone, premiums exploded across the heartland. Minnesota saw rates spike by 34%. Colorado jumped 33%. Nebraska went up 25%. But the nightmare goes much deeper than just price hikes. We have crossed a terrifying threshold where money can no longer even buy you protection. The insurance companies are simply packing up their bags and abandoning the American public. In Florida, we have watched half a dozen insurance providers go completely insolvent and collapse. In California, industry giants like State Farm and Allstate have completely stopped writing new homeowner policies. They looked at the mathematical risk of climate events, inflation, and replacement costs, and they decided that protecting the middle class is simply no longer a profitable business model. So, they left you on your own. And do not think you can just escape this by getting in your car and driving away. Auto insurance premiums have absolutely exploded, rising a staggering 64% over the last 5 years. That completely outpaces the general rate of inflation. You are paying massively more just for the legal privilege of driving to a job where your wages have barely moved. To add insult to injury, the healthcare sector is doing the exact same thing. Affordable Care Act marketplace premiums jumped over 21% this year, with average out-of-pocket costs rising by 58% after federal subsidies expired. This is the definition of a death spiral. When you combine soaring auto insurance, skyrocketing home insurance, and exploding health premiums, it acts as a massive, unavoidable, mandatory tax on the middle class. It is a tax you never voted for, and it is a tax you cannot escape. Why is this happening? Because the financial risk of living in the modern world is being forcefully transferred from the balance sheets of massive multi-billion-dollar corporations directly onto your personal checking account. They privatize the profits when times are good, and they socialize the losses onto the middle class when times get tough. But you cannot just sit there and let this system bleed your family dry. Despair and anger are not valid financial strategies. If the traditional safety nets are being pulled away, you have to build your own. Here is the exact, step-by-step blueprint to protect your wealth and fight back against the 2026 insurance crisis. Strategy number 1, you must completely change your relationship with deductibles and build a fortress emergency fund. The biggest mistake the middle class makes is using insurance for minor inconveniences. Insurance is only meant to protect you against catastrophic financial ruin. You need to immediately call your providers and raise your deductibles to the absolute maximum limit they allow. Yes, this means you will have to pay out of pocket for a fender bender or a minor roof leak. But by raising your deductibles, you will instantly slash your monthly premium bleed. You take those massive monthly savings and directly funnel them into a high-yield savings account to build a self-insurance buffer. You must become your own insurance company for small emergencies. Strategy number 2, the umbrella shield. As standard policies get weaker and more expensive, you need a different layer of defense. For less than the cost of a few cups of coffee a month, you can purchase an umbrella insurance policy. This kicks in when your auto or home insurance limits are exhausted. If you are sued after a major accident, your standard policy will evaporate in seconds. An umbrella policy provides an extra $1 to $2 million of liability coverage, creating an impenetrable legal wall around your assets, your home, and your 401k. Strategy number 3: exploit the telematics and bundling discounts. The insurance industry relies on the lazy tax. They know that most Americans will simply put their bills on auto pay and never look at them again. You must become aggressive. Demand to bundle every single policy you have under one roof. Furthermore, if you work from home or drive less than the average American, you must force your auto insurer to install a telematics tracker or use their app to prove your low mileage. Stop subsidizing the bad driving habits of everyone else on the road. Force them to price your policy based on your actual risk, not the national average. Strategy number 4: reevaluate your zip code. We are witnessing the beginning of climate-driven real estate depreciation. If you live in an area where insurers are fleeing, like coastal Florida, wildfire zones in California, or severe hail belts in the Midwest, you must recognize that your home value is going to take a massive hit when the next buyer realizes they cannot get it insured. You need to look at your primary residence not just as a home, but as a financial asset. If the holding costs are entering a death spiral, it might be time to strategically relocate your capital to a more resilient, insurable market before the mass panic sets in. The insurance industry has shown you exactly who they are in 2026. They are not a safety net, they are a profit extraction machine. They will drop you the moment you become mathematically inconvenient. You must adapt right now. Raise your deductibles, self-insure the small stuff, build an umbrella shield around your assets, and stop paying the lazy tax. If this masterclass opened your eyes to the brutal reality of the hidden insurance tax, hit the like button right now and share your experience in the comments. Has your home or auto insurance spiked this year? Have you received a cancellation notice out of nowhere? I read and analyze every single comment. To ensure you stay ahead of the corrupt financial system and keep building real wealth, make sure you are subscribed to the channel with notifications turned on. Protect your family, secure your assets, and I will see you in the next video.